Every investor bade 2023 farewell with an encouragement that a bull season awaits them. It has been two unbearable bearish years, and crypto hype almost faded into black. Several analysts monitored the charts and tried to keep the updates running. However, many hearts were already far from crypto investments. But it's time for a change of story. Cardano is still here, and being one of the top altcoins in the market, how rich could it make its investors this year? 2023. What a year. Aside from high-profile court cases, much of 2023 was a fairly lackluster year for crypto. Market activity remained mostly flat compared to the historical average. Major cryptocurrencies such as Bitcoin and Ethereum traded sideways all year, and total value locked in decentralized finance ecosystems drifted within a narrow range, far below all-time highs. This lack of dramatic volatility was far from the norm we usually associate with crypto assets. The minor pricing pump in Q4 closed out the year on a positive note. Yes, it wasn't a year for making money, yet there were reasons to stay hopeful. The green light and approval from the Securities and Exchange Commission for 11 Bitcoin spot exchange-traded fund applications featuring heavyweight players such as BlackRock, ARK Invest, 21 Shares, Fidelity, Invesco, and VanEck led to a notable upswing in the crypto market. It didn't look like it at first, but here we are today. The optimistic outlook before the approval was equally amazing. As a result, speculation is rife that a sustained bull run will replace the crypto winter. While markets didn't skyrocket last year, they also didn't collapse. There has been sufficient optimism to maintain its pricing stability. As noted, that optimism was largely related to the recent approval of spot Bitcoin ETFs and the potential approval of an Ethereum exchange-traded fund in the US, as well as the upcoming Bitcoin halving. The ETF approvals are expected to bring improved trading volumes and liquidity to crypto markets in general, and the halving will prevent Bitcoin deflation and thus support prices. Many pundits attributed the Q4 of the previous year's pricing pump to these factors, and it was coupled with bullish activity in the derivatives market as well. Investors appear to believe that central bank rate hikes are mostly behind us and that there is not enough weight to these optimistic murmurings to look forward to a breakout bull run in 2024. This is February now. Is this conviction still potent? Well, as the 2024 April Bitcoin halving approaches, the investor community is divided, with some expecting a bullish surge while others fear a downturn. The recent 21% increase in Bitcoin's value to $50,000 has fueled optimism among some investors, drawing from historical patterns of significant price hikes post-halving. However, a $20 million butterfly spread trade betting on a price drop to $47,000 by March ends is indicative of a more cautious outlook from certain market heavyweights. This mixed sentiment shed light on the delicate balance between long-term optimism and the immediate unpredictability of the cryptocurrency market. Nevertheless, since the beginning of 2024, the crypto asset class as a whole has more than doubled. By just about every account, the brutal crypto winter that lasted for much of 2022 and 2023 is thawing by the day. So as it looks like crypto is preparing for another bull market run, a lucrative opportunity presents itself. Bitcoin is one of the sweetest crypto options in this season. As the first cryptocurrency, Bitcoin's veteran status has pushed it to become synonymous with the asset class. This pick won't get any points for originality, but no crypto portfolio is complete without Bitcoin. I mean, who else agrees with this point? As it stands, Bitcoin makes up more than half the value of the entire crypto market. Recently surpassing the $1 trillion mark, Bitcoin is the most valuable cryptocurrency, and it's not even close. The next closest is Ethereum, with a market cap of roughly $350 billion. This intriguing dominance means that the majority of other cryptocurrencies are correlated to Bitcoin's price. So when Bitcoin is doing well, usually pulls the rest of the crypto market along with it. And this scenario is what's fueling hope about Cardano ADA. As the crypto market continues to gain momentum, there are a few better options than Bitcoin. It is the cryptocurrency with the longest track record, while also being the most decentralized and secure. In many ways, Bitcoin is the quintessential cryptocurrency, making it the most deserving of a spot in portfolios as another bull market looms. You cannot switch it to any other option. However, there is the DeFi champ Ethereum. Similar to Bitcoin, no crypto portfolio can be considered complete without exposure to Ethereum. While Bitcoin may have started the crypto race, Ethereum took the baton and changed the game. When Ethereum launched in 2015, it was the first blockchain with smart contract functionality. Yes, it kinda has a dark history with Cardano ADA from its inception, but both networks, interestingly, have similar goals. As one of the most innovative and popular uses of blockchain technology, DeFi is a multifaceted economy full of non-fungible tokens, stablecoins, yield farming, and much more. None of it would have been possible without Ethereum smart contracts, though. Since Ethereum's arrival, new smart contract blockchains have launched. Nonetheless, while there are other DeFi-capable cryptocurrencies today, Ethereum still dominates. There are thousands of cryptocurrencies out there. The crux of the matter is that a considerable number of them could outperform Bitcoin and Ethereum, and this is natural during bull markets as the smaller and more obscure cryptocurrencies tend to soar off of pure speculation. The reality is that these cryptocurrencies carry much more risk and may not even make it to the next bull market if they fall just as fast as they rose. But then there is Cardano ADA. Its fundamentals are quite solid, and Ethereum is even accused of copying its strategies. This was from Steven Narioff, a former Ethereum advisor who swiftly criticized one of Ethereum's proposals, accusing Vitalik Buterin of copying its rival blockchain Cardano. He even labeled the decision to part ways with Charles Hoskinson during the project's early days as a major mistake. In his tirade against Ethereum and its founders, Narioff alleged that the platform is merely copying Cardano's approach to scaling. According to Narioff, Buterin's major mistake was ditching Hoskinson, who later went on to build Cardano. The irony, as Narioff asserts, is that Ethereum has been emulating the very person they once dismissed. He said, "Are the clueless smug at Ethereum cultists who got rid of Charles happy now that the boy genius is copying Cardano?" Well, these contentions are not the reasons why Cardano is set for a bloom season in this bull year. It witnessed an explosion in total value locked in the last quarter of 2023, according to crypto analytics firm Messari. In a new quarterly report, Messari reported that Cardano's TVL set an all-time high of $449 million on December 14th and increased 166% in Q4 compared to the previous quarter. The project's fourth quarter surge also contributed to a 693.4% year-on-year increase compared to 2022. And just in case you don't know, TVL refers to the amount of capital deposited within a protocol's smart contracts, and is often used to gauge the health of a crypto ecosystem. Cardano started 2023 ranked 34th among crypto projects in terms of TVL, far lower than ADA's market cap ranking, which currently sits at number 9. Thanks to the massive increase across 2023, the project closed out the year ranked 11th in TVL. Maybe perhaps 2023 wasn't that gruesome. Also, Messari explained that Cardano also witnessed significant stablecoin growth last year. According to the analytics platform, early in 2023, Cardano's TVL growth had been catalyzed by the introduction of new stablecoins IUSD and JED. Stablecoins continue to be a good indicator for DeFi health in quarter 4, as stablecoin total value locked increased 36.8% to $21.5 million. Relative to other networks, Cardano's stablecoin market moved up from 54th to 32nd in 2023. Stable assets are ideal for pairing in liquidity pools, borrowing and lending, and creating leverage, as well as providing quick escapes from volatility, all of which are quite common in the crypto market. Furthermore, this is unrelated, but Charles Hoskinson did something recently. He extended his support behind the X community's strong defense of the European Central Bank's persistent skepticism towards Bitcoin. Citing the details shared via the X community notes feature on the ECB's post, Hoskinson remarked, "Community notes just murdered the ECB." The community notes highlighted that the chain analysis report mentioned only 0.34% of the transaction volume with cryptocurrencies in 2023 was attributable to criminal activity, with Bitcoin's share of illicit activity significantly lower at 25%. Moreover, the notes spotlighted that illicit transactions involving euro accounted for 1% of the EU's GDP in 2010, which was equivalent to 100 billion euros. This defense comes at a crucial juncture as the ECB skepticism continued despite recent positive developments in the US, such as the approval of Bitcoin ETFs by the Securities and Exchange Commission. The ECB equally cited the Chain Analysis 2024 report and highlighted Bitcoin's prevalence in money laundering. Charles Hoskinson frequently gets involved in many non-Cardano stuff. However, this is the main point. Don't snooze on Cardano this year. That being said, that's going to do it for today's video. Make sure you hit the subscribe notification buttons, and we'll see you in the next video.